Tesla stock today is approaching a critical level of resistance around $220 per share. If Tesla stock can close the day today above 220, that's a really good sign of what's to come. Here in this video, we will get into all of your Tesla stock breaking news today. And we should probably start with this. Mike P on X says Tesla is definitely going to solve FSD. And I would never have believed this if I wasn't activating FSD daily in my car. We truly live in incredible times and America will continue to dominate tech for decades to come. The setup is obvious and Elon Musk agrees with this post. So Elon Musk is agreeing that Tesla will eventually solve FSD. And look at that, Tesla stock is now above $220 per share. The high of the day today was actually $222.38 per share, so there's a good chance that we break out further from here. VK on X says, my wife who vouched that she would never ever activate FSD is now using FSD 12.5.3 for more than 90% of all of her drives. No amount of graphs or data can capture the success of FSD when it successfully passes a non-tech spouse approval test by Tesla. Elon Musk responds to this and says this is a good test for whether FSD is achieving escape velocity. I think there's a little bit of a joke embedded in this, but I think Elon has a point. I think VK has a point. A lot of females are going to be a little more cautious about FSD until they actually try it and realize, well, it actually does a pretty dang good job. Sure, you would not want to fall asleep behind the wheel, but to take some of that attention off the road and give it to the car does make some sense. And I do think there is not necessarily a language barrier, right? But there is a barrier of investors that just don't realize FSD even exists or that it works so well now. Almost like an investment barrier, because we can see any other product. If you're thinking about investing in Netflix, you can get on Netflix and see the obvious success that is happening over there. If you want to buy literally anything else, investments, you can go see them. Right? FSD, you either have to get the car with FSD on it, you have to know someone that has a Tesla with FSD on it to actually be able to try it out. And a lot of guys on Wall Street, a lot of the individuals that really control the markets, let's say control the markets, they don't know about FSD. They hear about it, but they don't really know about it yet. And I do think over the next coming months, especially as the Fed does lower rates, a lot more people are going to start to branch out their perspectives into new investments, longer duration investments like Tesla. And I do think this will be a big tailwind for Tesla stock. Basically, as the risk-free return, which is currently 5% in short-term treasuries, falls, that forces Wall Street to buy longer duration growth, to look out 5 or 10 years at what's going to be bigger down the line than it is today. And Tesla is a clear and obvious winner, even if you are, super bearish, I guess, on FSD progress. You can pretty confidently say, even if the rate of improvement cuts in half of FSD, Tesla is going to have full self-driving conquered in the next 5 years. Now, I think we all believe that's going to happen a lot sooner. But even if you wanted to be as conservative as you wanted, you could still put a relatively short-term time frame on the completion of FSD. Call it 5 years. And as that risk-free yield does drop, it's going to put a lot more value on Tesla's endeavors. And that risk-free yield being 5% for over the past year now, it has put a lot of downward pressure on Tesla stock. Elon Musk also responds to this video of a Russian general driving a Cybertruck and says, "Are you seriously so retarded that you think I donated a Cybertruck to a Russian general?" That's amazing. The misinformation around Tesla and Elon Musk still runs deep. It is being reported today that Waymo has introduced their 6th generation Waymo driver with 13 cameras, 4 LiDAR, 6 radar, and an array of external audio receivers. Our new sensor suite is optimized for greater performance at a significantly reduced cost without compromising safety. It provides the Waymo driver with overlapping fields of view all around the vehicle, up to 500 meters away, day and night, and in a range of weather conditions. Now, with 6 generations of hardware manufactured and integrated into thousands of vehicles, we have significant experience developing and operating fully autonomous technology at scale. Our 6th generation sensor suite already has thousands of miles of real-world driving experience under its wheels and millions more in simulation. The Waymo driver learns from the collective experiences gathered across our fleet, including previous hardware generations. And literally on this same post, this individual says, Waymo picked us up, then 30 seconds later it drove us into a light rail construction ditch. And that's why you have to train the car to be smart, not just slap a bunch of sensors on it. Other big news today, General Motors said Monday they are laying off more than 1,000 salaried employees at its software and service units worldwide. And I just gotta say, that's another big positive for Tesla. You know, GM is not going to compete with Tesla in any field that relates to software. Like, literally ever. And here you can see today option activity in Tesla stock from hedge funds, institutions. Overall, big money is very strong. You have 25 different trades totaling $9.23 million with a positive order value of 91%. That's about as good as you're going to ever see for the first couple of hours of trading. Some pretty bullish trades are starting to come through, though, that are relatively short-term in nature. You have this October 18th 280 call worth $223,000, a January 17th, 2025 $300 call for $2.12 million. That's a big trade. That trade specifically being $2 million far out the money with just a couple of months of time is a pretty clear sign that the direction is upwards from here for Tesla stock. Bullish Brit on X says when you look at Tesla's monthly chart, you can see a larger breakout from here. Really, that 220 level is critically important for this further breakout. But Brit over here on X believes $300 plus could be coming soon. And if Fed Jerome Powell does go well this Friday, if Jackson Hole is not a disaster and the markets sell off on that, if the economy continues to do okay, it doesn't have to do great, but as long as it's not getting worse, then I would expect Tesla stock is going to have a vicious end of the year rally as the Fed starts to cut rates. The markets are currently pricing in a 75% chance of a 25 basis point rate cut September 18th. You're pricing in another rate cut with 62.6% odds by November 7th. And then December 18th, you're pricing in another cut with about 42.5% odds. So you're pricing in 3 cuts by December 18th. In fact, you're actually pricing in 4 cuts just barely by December 18th. And I know it's easy to be bearish right now, and I get a little bearish as well because I just feel like the economy is going to weaken further from here. But statistically, the markets are showing you really good signs. Ryan Dietrich on X says the S&P 500 up 7 days in a row and up nearly 7%. The best 7-day win streak return since March of 2003. Now, yes, after, experiences like this, big rallies in a short amount of time, you have seen corrections at periods afterwards. But a lot of the time, they do continue to lead to a rising market. He goes on to say that strength like this isn't consistent with bear market rallies, but healthy bull markets. Up 7 days in a row and up 6% or more during a streak, you get above average returns across the board, 12-month median return of 17.5%. Now, we will talk about this a little bit more in the next video today, but September's coming up, and historically, September is not a good month. In fact, over the past 10 years, you've only had 2 green Septembers, and they were marginally green. At least 2019 was only up 0.76%, and 2016 was only up 2.19%. 2015 was down over 2%, 2020 was down almost 6%, 2021 was down almost 6%, 2022 was down almost 11%, 2023 was down 5%. The 10-year average is negative 2.77% in September. Like, you don't have any other negative months besides December, which is negative 0.46%. Like, September is by far the worst month for stocks over the past 10 years. And at the time of filming this video, it is August 19th. So we're heading into September faster than we realize. And a lot of what happens in September probably will come down to the economic data as well as the election. We really haven't had any election fears or uncertainties yet. And with a new potential president that we have not seen before, or has not been in office before, I do think there is a greater chance of more political volatility over the next coming months than what we otherwise would have seen if you were still, going to be voting on a Trump or Biden potential presidency. We've had both of them in office before. We already know what to expect. Kamala, we don't, right? We don't know what to expect. So that's a little different, creates a little bit more uncertainty, and that can translate into volatility in markets. At the same time, for Tesla stock, we are going to have this robotaxi event on October 10th, and I do expect we will see some kind of optimism or rally into that event. Potentially, maybe we sell off into the event and then we rally afterwards. I am expecting some kind of bullishness around that event. It could be before or it could be after. And if September is a bad month for markets, it's going to be a bad month for Tesla. And then October potentially could be a better month. We did have some Fed comments today, specifically from Kashkari. This did spike in outperformance of your small caps, of really your equal weight S&P compared to the market cap weighted S&P. In other words, this is starting to cause a rotation. Via what Kashkari said, the SPY is up 0.44% today. The RSP, which is the equal weight S&P, is up 0.6% today. So again, like I explained in previous videos, I'm not expecting a huge outperformance of the Russell of interest rate sensitive companies compared to the S&P, but I am, and we just seen that a couple of weeks ago, right? But I am expecting a slow and steady kind of outperformance of the equal weight S&P of small caps relative to the equal weight S&P. So I think it's going to be a period of weeks or months of outperformance of smalls and equal weight S&P. And today looks like the start of that. And again, Fed Kashkari has been one of the more hawkish Fed officials recently. He says today the debate about potentially cutting rates in September is an appropriate one to have. This was reported by the Wall Street Journal. He says inflation is making progress and the labor market is showing some concerning signs. He says a weaker job market should open the door to a September cut. Fed's Kashkari says the balance of risks have shifted more towards the labor market and away from the inflation side of our dual mandate. And I do think this is going to be a main component of Powell's speech on Friday. He is going to hammer down on the fact this is no longer about inflation. It is about the labor market and the economy and protecting the economy, not allowing the economy to go into a recession. I think Powell's really going to try to calm down investors in the sense of, hey, if things go wrong, we got you. Okay, you have nothing to worry about. We're going to backstop everything. That's the kind of vibe we're going to get from Powell on Friday. And I do think that is going to be bullish for markets. We did have a new Fed survey that shows lows in employment, worries about finding work, and dissatisfaction with pay. A New York Fed survey released Monday showed that of those who were employed at the time of the last survey in March, 88% still had jobs. The lowest in data going back to 2014. So basically 12% of these survey participants that had jobs back in March, well, they're now unemployed. Isn't that just great? No, that is really, really bad. Those who expected to become unemployed rose to 4.4%, a 0.5 percentage point increase from a year ago and the highest in the survey's history. Moreover, the level of those searching for a new job in the previous 4 weeks popped to 28.4%, up 9 percentage points from a year ago and another historic high going back to March 2014. People are not satisfied with their current job. That's almost a third of people in jobs today are looking for new jobs. That's, again, not a great number. On wages, satisfaction with current compensation dropped to 56.7%, down more than 3 percentage points from the same period in 2023. Satisfaction with benefits tumbled 56.3%, off more than 8 points from a year ago, while satisfaction with opportunities for promotion slid to 44.2%, down from 53.5% last year, and most pronounced among women, those without a college degree and respondents with household incomes less than $60,000. You know what this just screams to me? People are struggling. And hopefully the Fed takes data like that and makes the right decisions. Nonetheless, Tesla's short interest of free float is sitting at 3.13%. You currently have $18.77 billion currently sold short in Tesla stock, totaling 86.83 million shares. You have borrowed shares today of 678,000, return shares of 328,000. So it does look like there is some shorting activity taking place in Tesla today, about 350,000 shares or so. Google Trends data for the Tesla lineup is starting to show a lot more exciting data. Okay, the Cybertruck went from 65 to 69. The Model Y went from 25 to 29. The Model 3 went from 25 to 27. The Model S stayed at 10, but the Model X went from 8 now to 10. So you're starting to see another ramp up in Google Trends data. Tesla continues to run about 4,000 different ads with Google, and Tesla's global inventory numbers continue to trend higher for the Model Y and the Model 3 while staying consistent for the Model X and the Model S. Still, we're not getting to problem levels yet, but the Model Y and the Model 3 are definitely getting up there in inventories. The Model 3 at 6,500 vehicles in global inventory, and the Model Y at about 7,200. Sentiment for Tesla is turning sharply more bullish today, from yesterday being at neutral of 53 to 71 today, which is categorized as bullish. Message volume today is low at 43. Yesterday it was low at 31. And the participation ratio today is high at 55. 10-year Treasury yields today are falling 3 basis points to 3.86%, which is definitely helping some of this rotation aspect of our markets. CNN's fear and greed indicator is hitting the highest level you have seen in the last couple of weeks at 40, which is still in fear territory, but getting closer to neutral. And the latest AI investor sentiment survey shows bullish investors at 42.5%, neutral investors at 28.6%, and bearish investors at 28.9%. And again, on a technical basis for Tesla stock, $220 per share is that critical level. We're so close to that right now. It's hard to say if we're definitively going to close above 220. If we do, that is a rock solid sign of higher prices to come. Keep in mind this week, we don't have much for economic data besides on Thursday. And as long as that's not too bad, then the main story of this week is going to be Powell on Friday. But let me know what you think about all of this information down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. If you guys want to come trade with us live in real time as well, check out that link down below in the description of this video. You guys have a great rest of your day, and I will see you in the next one.